This is our Forex blog for April 8th, 2011. And you really want to buy the strongest currencies versus the weakest and sell the weakest versus the strongest. The dollar and the yen both have daily, weekly, monthly trend that's down. That's underneath the real-time histogram strength. You can see coming into midnight the dollar and the yen were both weak. Let's scroll over the euro dollar. Euro dollar had a huge burst of strength before at midnight, and the daily, weekly, monthly trend was up. Australian, had a little bit of strength coming before midnight and was mostly strong today. And the daily, weekly, monthly trend are up. And same thing with the New Zealand. Although for a long period of a couple hours there was a lot of weakness. When you have a lot of strength and then a lot of weakness come in for a few hours, when the strength comes back, if the daily, weekly, monthly trend's up, that trend oftentimes lasts for a couple hours. So there's good opportunities at 7 to trade against the dollar or the yen with the New Zealand. So basically you want to buy euro dollar, euro yen, Australian dollar, Australian yen, and New Zealand dollar and New Zealand yen pairs. Let's start with the euro. Here is the euro dollar. First note, yesterday when price was underneath the hourly, it was more likely to go down, down. Once it breaks above the hourly, usually the big move is going to happen to the upside. It's kind of going sideways right here, breaks out, and it just absolutely takes off. These are our Fibonacci profit target levels that I predicted last night, which make excellent places to get out of your trend trades. So if you had bought that earlier, this pretty much went up and just kept going sideways and up. This was an excellent place to get out of the trade. Usually when price is above the upper containment band, any kind of major resistance up there is a decent place to exit your trade. And I don't think I would have bought right here because it was right there. Once the resistance area gets hit once, twice, the third time it usually goes through. You can look for counter trend trades even at Fibonacci profit target levels, but only do so twice because the third time the price is likely to bust through it. That's why this trade right here is a very high probability one. You have a counter trend buy signal, which also happened here, but the next profit target levels up here at 40. You buy this around 09. You made 30 pips while risking 10, and that's only the real secret of trading is small losses, bigger wins. Let's look at the euro yen. Notice this one was underneath the hourly, fell, and it was kind of hovering here underneath the hourly. If it had busted through this level here or even here, decent place to sell it. The longer term trend is up though, so it's always wiser idea to be buying. And when it breaks out right here, look where it goes. Previous day's high, 2 days ago's high is right here. Major resistance. There's a weekly pivot level. Decent place to get out of your trade. We're nowhere near the upper containment band like we were in the euro dollar. So you might have bought this little pullback right here. The market went up, kind of went sideways with less momentum. You're out of your trade here. And you might have bought this pullback here because it didn't break that low, and remember the third time up usually resistance gets broken, and this time it didn't, so you might have made 5 pips there, 10. And I'd kind of wait and see for this level to get broken, and when it does you go long, and you got some major counter trend selling signals right here. The market is pretty strong, but you probably made 25-30 pips on that trade. Because of that incredible strength, you might have bought this pullback right here, and it really doesn't do anything, but you should have made a little bit of money on that trade as well. Let's look at the Australian dollar. Strong Australian, weak dollar. And notice again, when price is underneath the hourly, down, down. Once in the longer term trends up, once it busts through this high here, pretty high probability trade. And this one didn't explode up initially. It actually gave you a great opportunity to buy this pullback right here before midnight. Phenomenal trade, very high probability because you're risking 10 pips. Your first profit target is this previous day's high right here around 0510. You're buying this thing around here at 83. So you really have a chance to make 25 plus pips while risking 5 to 10. And this actually shot right through there, kind of came down a little bit. You might have made a few extra pips there. It found support. Anytime a major resistance, previous days, weeks, or months high gets broken, if it comes back down and really can't penetrate it back down, you want to buy it when it goes up again. And it went up about 20 pips. You might have bought this pullback here, this pullback here. Buying every pullback, in this strong currency worked. It didn't make you rich. A lot of the trades are only 5 to 15, 20 pips, but you know, during the U.S. session, most of these currencies weren't moving that much. Here's the Australian yen, and notice when price is underneath the hourly, it's more likely to go down. Once it breaks above there, this was a great trade, and it also, notice extreme strength. This is our trend explosion system. Anytime this happens and the market's not way above the upper containment band, usually buying it after a nice 15 to 25, 30 pip pullback is a high probability trade. Your stop goes right underneath the low here, and here is the previous day's high up here at 60. So you have a really good chance of making 30 pips while risking, you know, 10 or 12 max. And the market kind of goes sideways there, so you should be out of your trade. You know, breaks out right here. You might have went long here. Here's your next resistance area. And a lot of times resistance areas get hit, and there's major selling at these, you know, pivot levels, previous days, weeks or months, high or low. So if it doesn't get penetrated, you want to get out of your trade rather than give back all your profit. Let's look at the New Zealand dollar too. Notice what also this has in common. You know, a couple hours before midnight, this one started to show some strength. It was right at the hourly, broke out. Here's your next profit target level up here around 7,800. You bought this maybe around 77. And, you know, so you have a potential of 23 pips. You don't know if these trades are going to work, but the key is small losses, big wins. And it went up without that much strength, pulled back, found support again at the hourly. You might have went long again here. Here's your next profit target, same as before. But if it shoots through there, the next one's up here in this range, and this one even, you know, exploded through there. You know, so on a tick chart, you're watching this when it starts coming back down. You're not going to ever catch the high of it, but you might have got out of this at 78.14. You're in that trade there at 85, so you made about 30 pips. And this one pulled back, didn't hold support at the hourly, but did hold support here. When it started to go back up, you might have got back in this trade. There's a lot of statistical strength there. Notice as it's going up, it has less momentum as it makes a higher high than before. You know, you might want to get out of your trade there. And if you did take, you know, here's an example of a loss. This obviously looks strong in real time. You might have bought this pullback right here with your stop underneath here. Here's an example of a trade that didn't really work. It went up 5 to 10 pips, came back down. You know, you might have lost 6 or 7 pips on that. As they go up, you really should, you know, yank your stop up a little bit. If your stop's a little bit underneath the low here, it went your way, it came back against you, started going up again, you know, you might move your stop up a little bit. You would have lost 5 or 6 pips there. And if you had bought this one right here too, same thing. A lot of times when currencies aren't going to go up, if they did explode up, when they come down, most of the time they find support at the hourly. And if they hit the hourly and go sideways and start to go back up, you get in. And so that's a pretty decent trade. It really appeared like it was going to stall right here, so I would have got out of the trade around 78.05 for barely even 10 pips. And because it wasn't as strong as some of the other ones, I wouldn't have bought this breakout right here, but it did work.